Hi, my name is Sharicia and I am your budget coach. Before we get started, I want to take a moment to congratulate you on making the decision not just to improve, but to master your personal finances. In this tutorial, I'll walk you through how to use your personal budgeting spreadsheet so that you are always clear on your financial position. But before we do, I want to walk through a few terms with you. So the first term we're going to review is your income. And this is the money that you earn from various sources. It could be from your job, side hustles and gigs, rental properties, and investments. The next term is going to be your savings and investments. And this is basically money that you set aside for future use or for long-term goals, right? And your savings are typically held in liquid accounts like your savings account, whereas your investments are typically put into assets such as stocks and bonds, real estate, life insurance with an expected return. Next, we have debt, and this is the money that you owe to others, typically from loans or credit cards. And this could include student loans, car loans, credit card debt, and personal loans. And of course, we have bills. And this is your regular payments that you make for essential, keyword essential goods and services, such as rent and mortgage, utilities, insurance premiums, and childcare. And finally, we have expenses. And this is the money that you spend on goods and services to meet your needs and wants. And this would include groceries and entertainment. So now that we've touched base on all of the basic terms, let's go ahead and start teaching you how to fill out your personal budget spreadsheet. All right, so your very first tab is your categories tab, and you'll see up top that you have toggle buttons, and this will help you to kind of navigate through the entire spreadsheet. Second, you have your dollar symbol. In this case, I'm using the US dollar, but if you were to be using pound, for example, you go ahead and put the pound symbol in there, and that will reflect through all of your spreadsheets, so you never have to make any additional changes. Then you're gonna update your categories. Bear in mind that this is gonna be items that are gonna repeat themselves every single month. If you happen to have one month that has something maybe like a dermatologist bill that's not normal for you, go ahead and enter that manually. But whatever you put in here will go ahead and transfer itself over into your monthly spreadsheet, so you never have to enter those in again, okay? Next up, you have the debt tracker. That is my personal favorite because you get to see exactly how your debt is going down month by month, one bill at a time, excuse me. And so you see here, you have, for example, your start date is May 2024, and your payment method in this case is Snowball, which you can choose to have as Snowball or Avalanche. Now, what's the difference? Avalanche tackles your bill with the highest percent first to the smallest percentage, and you'll see that that reflects over here, okay? So in this case, Blanco has a 28% interest rate, so that's going to be the first bill that's going to be tackled, okay? If you choose to do the Snowball method and you change it to Snowball, you'll see it automatically changes for you to Perennial Bank because that has the smallest balance, and then you see that the larger balances go up. And what's great is it shows you exactly what month and year you can expect to have this card paid off, okay? You also have here the option of adding additional monthly payments. So if you saw that your budget, you have space in your budget and you can do an extra $100, what it's going to do every month that you put in that $100 is add it to the bill that you are currently trying to pay off first. Next, we have our savings tracker. My clients call this the fun tab, right? So you get to decide exactly what you're going to save for, and you can put a person here if you want to, vacation, if you have a wedding to go to. Obviously, you want to keep the emergency fund always stocked, and your nest egg always stocked, but you can add extra things in here like investments, shoes, your children's clothing for the winter, so you can start pre-planning for those things and not have to feel the burden of that weight, that financial weight when the time comes. Okay, so as you're filling this out, it's going to show you your progress, and on the very bottom, it's going to have a chart as well, so you can get a visual of exactly where you're at. And at the end, I'm going to do a case study so you can see exactly what this is going to look like. Up next, you have your bill calendar. Now, I know this seems so irrelevant, but I promise you, if you have a visual of what's going on for your month, you'll make better decisions. So first, you're going to change your month and your year accordingly, as well as when you want your start day to be, whether that's Monday or Sunday, it's the beginning of your week for you. So you're going to enter first all of your income, and then you're going to enter all of your bills and their due date. What does that show you? So, for example, you have here National Bank is due on the 15th. You should not be paying National Bank on the 17th. That means that you have already accrued a late fee, right? So that means you need to look at what's happening on the 3rd and the 10th so you can pay this bill in advance. So if you have all of your bills lined up, you'll see that it's going to be much easier for you to make a decision. You can also see if you're top heavy in the month, meaning maybe you have too many bills coming in 1 week, and you can call those companies and try to move around your bill dates so that your month is much more balanced. Okay. Next, you have your annual dashboard. This shows you all of your income, savings, and investment. You do not have to enter anything. It bleeds over from all of your months. All it shows you really is how much money you're getting, how much you're saving, how much you're investing, right? And it motivates you to keep going. You may even put a couple of dollars extra every month because it gets you excited. And when you start seeing your trend, this investments, especially going up, 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 you're going to want to enter more money into that every month. All right, and this is our final spreadsheet that we're going to go through, and this is your monthly budgeting spreadsheet, guys. This will help you determine exactly what changes you need to make before the end of the month so that you can come out on top, okay? So here on your left-hand side, you have your actual breakdown. This is where it shows you all the percentages of everything that you're spending for the month and all of your income. You have your summary, which is what you budgeted for versus what you actually spent or made. And of course, you have your action plan. Remember earlier we discussed in your bill calendar that maybe you found that it would be prudent for you to move some of your bills toward the end of the month because you're top heavy, right? So you want to put in here, for example, call Perennial Bank to move payment from the 5th to the 25th, okay? So then you have all of your categories here. And remember, I told you that everything comes in already from your category tab. So you don't have to put it in here unless you have one special bill that came up or expense that come up. So you would enter that manually. So I'm going to go ahead and just put a couple of things in so you can see how your actual breakdown percentage works. Okay, so let's say in this case, you budgeted for $4,000 coming in for the month from this job, but you actually got 5,000 because you worked overtime. You'll see here it automatically adjusts your income for you. Okay, your food budget is about $400, but you actually spent $550. And your mortgage, because you're using your bill calendar, was paid on time. Okay, and so we go ahead and we put that in as actual 1,500. So far for the month, your bill percentage is 21% of your money. Your expenses are 8%, but you also happen to decide that you wanted to save for emergency fund $500 a month, but you were only able to save 300. And now today is the 15th of the month, right? Let's say, for example, it's the 15th. So far, your savings, you have 4% and your goal was 10%. That tells you need to make some adjustments, right? So either you need to work a side gig or have a little garage sale or cut back on expenses, right? So that you can now put that extra money into your savings. But either way, it helps you predetermine exactly where you're putting your money and how you can make those adjustments before it's too late. Okay, I hope this was helpful. And our next segment, we're going to go ahead and do a case study on Miss Lisa Johnson so you can see exactly how to fill out the spreadsheet. Okay, so now we are going to do our case study on Miss Lisa Johnson. And this is basically all of her incomes, her expenses, bills, savings, investments, and debt. Okay, in the debt tracker, we went ahead and entered all of her debt for her and her interest rates, minimum payments, and balances due. So if you'll see here, we have already pre-selected 2024, the month of May. And so on May 1st, she's going to go ahead and overpay $400 to National Bank, where her payment is only $150. Okay, so we have this entered here. She can put any little note that she wants in here, and you'll see over here, so it shows you National Bank, her payment should be $150. She paid $400, so she actually overpaid by $250, and that adjusted her balance for her with interest for the next month's payment. So that shows up automatically over here as well. You can see it right here in National Bank. It changed from 150 to 400. Okay. And so every time that you do that, it updates automatically for you. So let's go ahead and put in again 05/15 of 2024. And this time we're going to go ahead and pay Blanco. And I'm going to go ahead and put in the minimum payment because our focus right now is to pay off National, for example. Okay. So we're going to put in Blanco here. And you'll see that automatically updated everything here. And of course, it updated everything over in Blanco as well. And if you pay attention, it's telling you at this rate, Blanco is going to be paid off on January of 2029. Okay. So now we're going to go into her monthly. and we're going to enter her information so that the rest of the tabs show up for you. So on top of her income of making $4,000 a month, and she made $5,000 because she worked overtime, she also does a food delivery service at about $200 a week. So that equals about $800 per month. However, it was raining one of those days, and so she decided to take a couple of days off because it was still a little bit muggy the next day. So her income was $700 that month, okay? Then she did a garage sale because her garage was full and she figured she can make some money from that. So she anticipated making $300, but she actually instead made $200. Okay, so now her income for the month, she budgeted $5,100, but she actually brought in $5,900. Then under her expense column, she spends about $100 a week or every 2 weeks, I'm sorry, on her nails. And so that brings her into about $200. But she decided to give bigger tips this month. So she actually spent $220. Her tolls are pretty consistent, so she spent $50 on her tolls. Her entertainment budget, because she wanted to go out with friends, was $200 for the month. And she actually ended up spending $250 because they went out for drinks after. And her subscriptions, which by the way are not a bill, subscriptions are an expense because it is not an essential, okay? It's a want, not a need. So under subscriptions, it's gonna go under expenses, and this costs her about $40 a month. And so she actually paid $40 for the month. And then she has her regular monthly bill. So she has city municipal at $70 is what she budgeted, but this month she ended up spending a little bit more on that bill. So it was $75. Her electric bill usually costs her about $100, but she spent $90. She didn't have to use her AC as much this month. Her car note is set at $300, and that's consistent because she does pay her bills on time. Her car insurance at $120, also consistent at $120. And her phone bill typically comes in at about $75. So she paid that on time. So you'll see the adjustments have already started to come in, right? And she still has 62% of her income left over. So far, 23% of her money has gone into bills and 12% into expenses. So now let's talk about her savings. So she typically likes to save 10% a month of her money. So because she made $5K here, $700 here, and $200 here, which brought her in at $5,900, 10% of that is $590. Okay, that was her budget, but she actually only put in $500. Okay, her nest egg, she wants to put in $100 a month until she's gotten her emergency fund to the amount she wants it to be. So we're going to consistently put in $100. And then her sister's getting married in a few months, so her budget for that is $500, but she wants to put in $100 a month. So by the time the wedding gets here, she has the $500. And then she has vacation in a year. That's going to be about $1,200. So she also budgeted $100 a month for that. Okay. Then on her index fund for her investments, she puts in $150 for her budget. And then she actually has them allocate that out of her check every month for her. She has it automatically deposited. Her life insurance is $100. And she actually pays that. And then her debt payoffs for National Bank, she has $150. For Blanco, she has $50. And for Perennial, I believe it was $400. Let's go ahead and check the debt tracker. It was $120. And so she pays that every month unless she decides to pay something extra. So now let's take a look at her overall month, okay? So now it's telling us that she has money left over. You see, she still has 56% of her income left over, which is fantastic. This is not most of us, but in her case, this is great. She's still a single woman and she makes good money, okay? So in her case, 3% of her money went toward debt for the month, 2% went toward her investments, 8% went towards savings, 20% to her bills, and 11% to her expenses. What does this tell you? So this tells you in Lisa's case that she can go ahead and put more money into the things that are valuable to her, right? So obviously her retirement fund, she can increase that. She can increase her savings every month. She can definitely increase how much she's paying toward her debt every month, right? So now let's use the debt for an example. So let's go back to the debt tracker. She's doing the snowball. And so her first bill that she's paying down is Perennial Bank. So because she has extra money she can pay toward Perennial Bank every month, she decided she's going to allocate $200 extra a month toward debt payoff. Okay? So that just automatically change on its own. So let's go ahead and enter that she paid here for Perennial Bank, 05 on the 20th, 2024. And so now instead of her typical payment of $120, she's paying $320. And she pays that to Perennial. Okay, so now because she has that total put in there, everything that she does is going to go toward paying this off faster. So do you see that the date for this change? It was before, because she was paying $120, now she's paying $320. That date has now changed to November of 2024, and she has much fewer payments to make. And then what's going to happen automatically is the chart is going to switch over to the next one, so you can start paying that next bill off based on the payment method that you choose. Okay. Then in her annual dashboard, you've seen so far that she's made $5,900 for the year. Her total savings is $800 and her total investments is $250, which of course gives her motivation to push more. So she decides now that she's going to put more toward her investment. So although her budget is $150 and $100, she now calls the company and changes that to $250 and $300 because she wants a much better life insurance. Okay, that's going to be able to pay her out with living benefits if she ever gets into a jam. Okay, so now you see here her investment and her savings have went up. Investments is now 5%, savings is now 8%. Her debts are 3% still. We forgot to put this in here, so now it's going to be $350. That she $320. I'm sorry, that she actually paid. Okay. And so now her debt payoff went up to 5%. Okay. So you can consistently tweak as you find it necessary. Every dollar should have a job. If you have extra money left over and you do not assign it to something, you are going to spend it on things you don't need. And then you're going to find yourself in that hole every single month. Okay. Now we're going to take a quick look at everybody's favorite tab, which is the savings tracker. Okay. And we're going to go ahead and enter in here what she wanted as a goal for her emergency fund. So for her emergency fund, she wanted $2,000. She currently has in her emergency fund $500. So it shows you automatically she has $1,500 left to save. Her progress is at 25%. And right here, she can see exactly where she's at with that 25%. Okay. Let's do the same for all of these. Her nest egg, she wants to save $15,000. She just started, as you well know. So her nest egg is currently at $100 because she wants to build an emergency fund savings first. Okay. So you're going to put 100 in here. And right now she's at 1% of that savings, and it's going to show you again where you're at here, and so on and so forth. So it gets more exciting as you go. And of course, you do your start dates and your goal dates. If we're on vacation and it's now the 1st, which I love planning for my vacations. Okay. And then my goal date is in 1 year. So we're going to go ahead and put 05/01 of 2025. So it gives me 1 full year. Okay. And my goal amount for this vacation is $3,000. And we just started. So her vacation amount so far is 100 because of course, again, her primary is the emergency funds. Okay. Always prioritize. So right here, she put in $100 so far for the month. So it brings her down to $29,900, and it really is less than 1% of savings so far. So it's not going to show up as a very great number, but that's okay. And then if you have smaller savings project, like you want a small purse, you can go ahead and add that in, what day you want to start. And every time you add something here, it adds down here as well, so you can see your progress. And so you can continually pay attention to how much more you have to go to get to your final goal. So your total amount is $47,000. Your current balance is at $700, and you have left to save $46,300. I promise you, it's so amazing to see these numbers change. So thank you for joining me. I know this tutorial and the spreadsheet will set you well on your way to your financial journey. However, if you need any support or have any questions, please check your confirmation email. We provided you with our contact email, as well as our social media platforms and an invitation to join our free community. And I hope to see you soon.